Hi everyone, and welcome to today's morning report on Tuesday, the 30th of September, with me, Richard Perry, market analyst at Handtech Markets. These European markets have started fairly mixed, and that's come after a fairly decent close actually on Wall Street, rallying from it was around about percent lower in the early trading, closed just down on the S&P 500, down about quarter of a percent in the end, so quite a decent recovery seen there towards the end of the session. And also Asian markets, the impact has been largely due to the ongoing influence of this pro-democracy demonstration in Hong Kong, certainly leaving investors a little bit cautious. But also we've had Chinese HSBC final manufacturing PMI just dipping slightly to 50.2, which was slightly below expectations of 50.5. And Asian markets were slightly negative on the back of that. But as I said, these European markets are pretty much flat, and I think that's coming as these traders are looking ahead really towards all the key data that really starts today. There's a lot going on today, and that could well have an impact throughout the session. In terms of the dollar, how that's trading, we're certainly just seeing a bit of a consolidation, as I said, across the board pretty much. Euro's basically flat on the day. Sterling's a little bit stronger though, and other than the euro, the dollar is actually just a little bit weaker against pretty much all the major currencies. So a little bit of a dollar correction, although it's not really coming through yet on the dollar index, primarily because of the huge weighting that the euro has on the dollar index, well over 0.5% in terms of the weighting there on the dollar index for the euro. So, how is this all playing out with regard to our indicators today? Well, we've got the eurozone at 10 o'clock is the big focus. You've got the flash CPI data that comes out at 10 o'clock. That is the first look at inflation for this month. And it's 0.3% is expected there. So the expectation is that it's going to be sort of fairly flat, I think, because you've had a fairly reasonable showing of German inflation yesterday. So that that just gives us a little bit more confidence that this could be seen as 0.3%, and also the core data as well. That needs to be looked out for at the same time, and 0.9% is expected there. So any real showing of positivity, maybe a dip, maybe a rise to 0.4%, but to be honest, it would give the euro some support, but to be honest, it's unlikely to be far off the expectation there. From following on from that German number anyway. But we've got also the unemployment data, again expected to come in line with last month, 11.5% on that unemployment, but you've still seen a bit of a downward trajectory, although we have over the last couple of months seen unemployment just begin to flatten off at 11.5. So we need to see that dipping once more if unemployment is to continue to improve, certainly. Then we're into the afternoon, and we're looking at the US. We've got the consumer confidence at 3 o'clock, expected just to increase slightly to 92.5. So a lot to go on today, and this is the start of 4 days worth of significant data. So traders will be aware of that, and a little bit of caution in front of that. I spoke to you earlier about the S&P 500, and that is actually my chart of the day. And that is because I think it's had a fairly nice correction over the past week or so, and it's just simply back towards this primary uptrend that's been in place all that dating back to Q2 2012. So you've had that. You're also coming back and found support above this this band of support between 1945 and 1955. So that's another positive. But what I said in the morning report is that you had this intraday rally that left a low at 1964, but you could argue even that that is a bull hammer candlestick, not entirely by the book, because you've got a negative real body on that candlestick, but still I think it could well be considered to be a hammer. You've got all these momentum indicators that have unwound nicely to a position where the bulls would be happy to start buying again as well. So I think in front of this data, that is a really good bounce on the S&P, and we might start to see a bit of support coming in around, as I said, that 1964 area. So I'm beginning to think that maybe this recent correction could be running its course, and we might be ready to start buying once again on the S&P 500. The intraday chart doesn't show you a great deal that you already know, so it's not too much. I mean, in fact, it's probably more negative than positive on the intraday chart, but certainly I think that rebound that gives us that bull hammer on the daily chart is something that we need to think about now. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.